Okta is a software company that originally came out of the single sign on need of businesses that have multiple applications for employees to log into. They would use an application or a technology like Okta to give employees a single sign on and then be able to access the different systems they need to access to do their jobs. Saved a lot of time. It's just a good idea. So, overall, this business has grown from that starting point and has really evolved, becoming a bigger player across the enterprise. It's also now giving access to agents and people to use AI, which is important. AI is going to access enterprise data. You got to keep that data secure. So I'm going to take a look at Okta from an investing perspective. How is this company doing? Is it priced well? Is it priced at a discount? What do I think their future prospects look like? I do have experience in software. I've worked in software for more than 30 years. Okta came from a request of an advanced investor member that wanted me to take a look at this software company, and I'm happy to oblige. I hope you find the analysis interesting. I'd love to get your comments on Okta. Okta is a $15.83 billion market cap company. It has revenues of 2.76 billion. The PE for this year is really high at 107, and the forward PE looks pretty rational at 26.67. Analysts think it's 34.68% discounted. The current year, the stock is up 14%, but you see that it was up much higher and then it's really come down. It is trading lower than when it announced their earnings on August 26th. The company is growing top line revenue by 12.68. They've had very good growth years in the past. But as the numbers get bigger, it's harder to grow at the same percentage. So that's understandable. They have good gross profit, but not a lot of net profit, which is interesting. Nice, big, chunky gross margin number, but not a lot of that revenue or profit, I should say, is getting down to that profit margin line. It'll be important for them to expand that. The cash flow does look really good, 30%. Free cash flow margin looks really, really good. I'll use those numbers when I value Okta. Their balance sheet is good. They have more cash than debt on their balance sheet. 38 analysts cover Okta. That's plenty of coverage. Some analysts are quite optimistic on the stock. They believe it's worth $142 a share. Some analysts are careful with this stock and they have a price target that's below their current stock price. On average, they believe consensus that this stock is discounted by 34%. The future prospects for the business look good. They're going to keep growing at about 10% for a couple of years and then come down a little bit. They're going to get to almost near $4 billion in revenue in a couple of years. Earnings per share is also going to expand nicely, bringing down that earnings per share, which is important because it is a pretty high number. It'll be good to get that number down so it's nice and rational. I completed a valuation of Okta using the free cash flows that they have, putting a forecast together on those cash flows, and then doing a net present value calculation on what I expect they're going to produce in the future in the form of free cash flows. When I do that, I get a 46% discount, which is a very good discount on a stock. This is kind of teetering on being a small to mid cap stock, being at $15.8 billion. So that's a pretty attractive discount. The earnings per share looks pretty decent as well, providing an 11% discount. Now, when I combine the two, I have a 38% discount available on Okta. That is a compelling discount, I must say. Now, the market didn't like the last earnings. I think the growth isn't overly exciting, but this is a good value for an investor that wants to have another software company in their portfolio. I certainly am thinking about adding some shares. This is certainly a buy in my book. If an investor is looking for a good technology software stock that is a mid cap or a small cap, this might fit the bill. I like the company a lot. So that's my analysis of Okta. I hope you found it interesting.